Now, if you guys been watching me for a while, you know that I'm a huge fan of JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, and this is due to several different reasons. Number one, this ETF offers exposure to the Nasdaq 100, but does so with less volatility because of the option overlay, which I definitely am interested in too. But along with that, JEPQ is very well managed. The ETF has offered a nice positive total return, is somewhat low beta, and has offered substantial dividends consistently ever since I started buying into it, which was basically during the inception of the ETF. Now, along with that, a bonus on top, JEPQ is cheap to hold on to, and as far as in the premium income ETF space, JEPQ is sort of known as the king of all of them. But in this video, I'm going to go through another premium income ETF, another higher income ETF that even yields more than JEPQ, offers very similar high quality exposure to an underlying index, but even does multiple things a little bit better than JEPQ does, in my opinion. So if you want to see which ETF I'm talking about and go through with me, well, then make sure to stick around, drop a like down below, and let's get right into it. Real quick, you guys know how much I'm obsessed with forecasting the future when it comes to investing. And this is simply because I think building on models for what you can expect in the future, at least theoretically, is one of the most motivating things an investor can do. Simple yet effective dividend calculators like the one that you can see right here on my screen, which is on dividend-wealth.com, allows you to input an initial investment amount along with your target value and lets you see what it would take as far as cash and time-wise in order to achieve your long-term investing goals. Head over to dividend-wealth.com. Try this amazing tool along with others out for free. It's also linked down below, the first link in my description. Now, the ETF that I'm talking about that does a lot of things like JEPQ does in theory, but only a little bit better in my opinion, is ticker symbol SPYI, or the NEOS S&P 500 High Income ETF, which I've been buying a significant amount of shares of basically every single month ever since I found out about this one. Now, SPYI, just like JEPQ, offers monthly income, which is especially important for us investors like myself that maybe want to use our income sometime in the future to use for bills, expenses, and in my opinion, if you're trying to do that, the more consistent the distributions, the better. Now, this ETF has an expense ratio of 0.68%, so it is much more expensive than JEPQ, but I still think it's worth it. The distribution rate is around 12%, so it is higher than that of JEPQ, but on top of that, the distributions, which I'm going to share with you guys here in a second, are much more consistent. Now, to dig a little bit deeper into SPYI to share with you guys how this ETF works, and I promise you're going to see certain things that this ETF does similar to JEPQ, but still different. Number one, the NEOS S&P 500 High Income ETF seeks to generate high monthly income in a tax-efficient manner with the potential for equity appreciation in rising markets. Now, the first difference, of course, is that this ETF utilizes the S&P 500 instead of the Nasdaq. So again, sort of similar considering they're both underlying indexes, but again, S&P and Nasdaq are very different. Now, this ETF says offers high monthly income generation. This ETF aims to generate high monthly income by investing in the constituents of the S&P 500 and implementing a data-driven call option strategy. So again, somewhat similar to JEPQ, it buys into an underlying, then of course utilizes options to earn premium, which in turn is paid out to investors as far as dividends and distributions. Now, this is where JEPQ differs a little bit from SPYI, for example, the tax efficiency. This ETF utilizes SPX index options classified as Section 1256 contracts, or 60% long-term, 40% short-term, and fund managers may seek to take advantage of tax loss harvesting opportunities. So especially when you're talking income generation or a 12% yield, getting that income tax efficiently is going to be very, very important. Maybe somewhat more to some investors than others, but for me, it's very important. Now, this is also where this ETF differs. It has upside potential. SPYI aims to capture a portion of the S&P 500 upside when the index rises. And this is partially due to the fact that this ETF at times is going to sell and buy SPX index options. Now, this is another thing I absolutely love about SPYI compared to even JEPI or JEPQ for that matter. The fact that the distributions are paid out monthly, just like those others, but the distributions are much, much more consistent. As you can see over the last year or so, the distributions have been anywhere from 50 cents to 48 cents, more or less. But basically, for every single share of SPYI that you own, you're sort of at least expecting around 50 cents per share per month. Now, can this change? Can this go up or down? Of course it can. But at least that's more or less what we're expecting. Now, this is also especially important, like I said, for investors that are going to be building out positions maybe long-term to use for things like expenses or to pay your bills. Sort of having an idea of what you're going to get paid on a monthly basis can be very, very helpful. Now, don't get me wrong, JEPQ's payouts have also been pretty nice over the last year or so, as you can see anywhere from 45 cents to 55 plus cents on a monthly basis. But again, certain months being 38 cents and certain months being 55.6 cents, that is sort of a big difference, especially when you have hundreds or thousands of shares and can kind of mess around with your cash management. Now, just to reiterate, like I said earlier, JEPQ is still one of my favorite higher income focused ETFs across the entire market, and I've been basically holding on to JEPQ since I started trading. But I just wanted to make a video about SPYI because a lot of dividend or income focused investors are very certain on the fact that JEPQ is one of the best ETFs across the markets. And even though I totally agree with that, there's also other high quality ones too. Now, before I take you guys inside of my actual portfolio and share with you how many shares of both SPYI and JEPQ that I personally own and how much I receive on a monthly basis, I did want to just compare JEPQ and SPYI head to head together over the last 2.44 years, which is now a decent amount of time to go off of. A $10,000 investment and dividends being reinvested along the way into both these ETFs. SPYI, for example, over this time frame would have returned around 36.36% or an average around 13.53% per year. Not bad whatsoever, but over the same time frame, JEPQ has definitely outperformed SPYI with around 60% more or less total return and around 21% on average per year, which is massive. Now, I think it's safe to say that both these higher income focused ETFs have done well over this time frame, but still probably because JEPQ as far as share price has grown a lot more than SPYI during this time frame, JEPQ is the winner just because of the upside the ETF has had. Now, this brings me into the final portion of today's video. I want to share with you guys how much SPYI I'm currently holding on to right now and how much I'm receiving per month as far as income goes. So across all my portfolios combined as of right now, I have around 853 shares of SPYI at an average cost around $48 more or less per share. Now, with the current yield more or less, I'm earning around $400 per month, which is massive. And with that $400, I could of course go ahead and buy more shares of SPYI or do what I normally do and just use that cash balance to sort of spread things out through my portfolio. Now, JEPQ, on the other hand, I have just shy of 500 shares, which I have been buying a lot more JEPQ in the past few months, which has been great. And with these amount of shares that I have when it comes to JEPQ, I'm earning around $200 to maybe $300 depending on what the monthly dividend is, because again, JEPQ doesn't necessarily pay the same exact amounts every single month. Now, all this to say that JEPQ is one of the best higher income ETFs, like I said, and like a lot of you guys probably do think, but there are tons of other awesome ones, which I cover all the time on my channel, so definitely check out some of my other videos also. So now that we talked about JEPQ and one of my other favorite higher income focused ETFs, SPYI, or the NEOS S&P 500 high income ETF, I share with you guys what this ETF is, how it works, how much it distributes monthly, or at least has historically, and I share with you guys how much of each of these ETFs I currently hold on to. I lastly, most importantly, want to hear from you down below. When it comes to higher income focused ETFs across the entire market, what are some of your favorites? Drop the ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.